So you want to retire early, but you need medical insurance. If you're going to retire before age 65, then making sure that you've got insurance available to you is probably at the top of the list of things that you need to have in place. It's one of the most expensive things that we have to deal with. And being without medical insurance, we're just rolling the dice. So you could do it, but I don't recommend that. So I'm going to talk about the 5 options that are available for health insurance before age 65 when you can claim Medicare. Health insurance is one of the highest costs that we have pre-retirement and also in retirement. And budgeting for that can be a big deal. Budgeting is one of the keys for a successful retirement. So if you'd like a copy of the budget spreadsheet that I put together, then just put the word budget down in the comments and I'll send you a link to the free budget that I put together. I'm a mid-50s Gen Xer myself, and I'm here just to talk about all things retirement. And both financial and non-financial today, we're going to talk about health insurance. So let's jump right in. So there are a number of options, 5 specifically, that I'm going to talk about. And the first one is maybe you don't actually fully retire. You do a semi-retirement and work a part-time job that will offer benefits. There are lots of companies out there that actually do hire a lot of part-time employees, but still offer health insurance benefits. So that's an option if you're not ready to fully leave the workforce, but you want more freedom. You want to be able to do some things that a full-time job would not allow you the time to do. This is a great option. So I would definitely look at a quote unquote semi-retirement and see what options are available out there for companies that offer that type of thing. So when you leave employment, the next option available to you is insurance through COBRA. That is coverage that you qualify for. It's the same plan that you had when you were fully employed, and you have access to that for anywhere from 18 to 36 months. You get the exact same medical plan that you had through your employer. The difference is when you were employed, you were paying a portion of that, and the employer was paying a portion, usually the largest portion. So when you go on COBRA, you're going to be paying the full premium, which can be quite expensive. So if you look at what you're paying today, you should be able to find out from your HR department what they're paying. That'll give you an idea of what COBRA will cost you per month after you leave employment. All right, number 3 is the Affordable Care Act, or Obamacare. And this is something that's available to everybody. There's a marketplace called healthcare.gov, and it's very much state specific. So where you live will dictate the rates that you can find on the marketplace on what you will pay for the health insurance. The nice thing about the Affordable Care Act is that if your income is not super high, your taxable income that is, then there are subsidies available. So the costs for your premiums are subsidized by the government, your tax dollars. With this coverage, there are copays and deductibles, just like you had on your insurance through your employer. One big difference is that the Affordable Care Act insurance should be significantly cheaper in most cases than what you would get through COBRA. Now, there are a number of websites that you can go to find out exactly what your insurance options are through the Affordable Care Act. So if you go to healthcare.gov, that's the official Affordable Care Act website. You can navigate that and you can put in your state, your age, all of those factors to determine what it will cost. That site is not the most user-friendly in my opinion. There are others that I like. One is kff.org. That's kaiserfamilyfund.org. Super easy to navigate and very straightforward. You go to that website and everything you need is right there on that main page. I'll put the links in the description for these websites so you can check out your options in the Affordable Care Act. All right, number 4 is private health insurance. So very similar to what you get in the Affordable Care Act through healthcare.gov. The difference is you're going directly to insurance companies like Blue Cross Blue Shield or Premera or United Healthcare, and you're applying for and getting policies directly through them. The policies you can get there are the same as what you would get through healthcare.gov. The big difference is that there are no subsidies when you go through private insurance. So I'm not sure why you would go that route when you have the Affordable Care Act available to you, but it also is income dependent and you may or may not get subsidies through healthcare.gov. So it would be smart to do a comparison to see what the options look like. All right, the fifth and final option that I want to talk about today are healthcare sharing plans. This is an option where you share costs of medical care with other people. So part of this plan is that each month you pay a share, which is kind of like a premium each month of the expenses. And then annually you have an amount, whether you're single or married or whatever the case might be, that is the unshared amount. So this is kind of like a deductible. The monthly cost, or the premium, if you want to call it that, ranges between, $60-ish up to $500 or $600 a month. So not radically different than premiums for health insurance, but it can be less expensive this way. And then the unshared amount, or the deductible, for individuals are somewhere in the $300 to $500 range. For couples, it's around $1,000, and for families, somewhere in the $900 and as high as $5,000. So it just depends on your situation. So who are these plans good for? For people that are typically in generally good health, for somebody who doesn't qualify for the tax subsidies through the healthcare.gov website for the Affordable Care Act, or you just can't afford premiums for traditional health insurance. So this is technically not considered insurance, but it is qualified as insurance for the Affordable Care Act, so that you would not be considered to be going without coverage if you go this route. So there are a number of companies that offer these sharing plans. Some are religious affiliated and some are not. So Medicare, Christian Health Ministries, those are a couple that are religious based, and there are certain guidelines that you have to follow in order to qualify for sharing in those plans. Two options that are not religious based are Crowd Health and Zion Health. So no matter what your situation is, I highly recommend that you would talk with an independent insurance broker to help explore the options available to you and make the best decision for you financially if you are looking to retire early. As I mentioned before, health insurance can be one of the most expensive parts of your overall budget, and budgeting for retirement is one of the keys to a successful retirement. So if you'd like a copy of the budget planning spreadsheet that I put together for retirement, then just put the word budget in the comments and I'll send you the link to that. A lot of Gen Xers have not saved enough and are in the position where they may have to retire with little or no savings and live only on Social Security. If you want to explore more on the topic of living only on Social Security in retirement, then watch this video here.